All right, thanks so much. So yes, as Katie said, I'm with the Financial Empowerment Center. And for anybody that is not familiar with us, we are a local nonprofit that offers free one-on-one financial counseling. We are remote right now, so we do our counseling by phone or video, but all of our services are free and ongoing. So yeah, we're gonna get started with one of my favorite topics. Just to give you an overview, today we're going to get started with a little bit of an icebreaker. Then we're going to talk a little bit about the difference between credit scores and reports. And then I'm going to walk you through how to pull your credit report from annualcreditreport.com, and then talk a little bit about how you can build and maintain your credit score and how the FEC can help with that. All right, so for this part, if you could either enter it in the chat, and then Katie, if you guys on your team can just kind of read those out to me because I can't see it. What words or associations come to mind when you think about credit? And this can be literally anything. When I presented to my mom this morning, the first word out of her mouth was fire. So literally anything. And I'll just give you a moment. What words or associations come to your mind?
We've got money, FICO score,
good one.
Debt, confusion.
Yeah. Good ones. All right, yeah. So really one of the things that I see probably most often as a credit counselor is just kind of a misunderstanding between what is the difference between your credit report and your credit score. And I really liked this graphic because I think it does a nice job of breaking it down. Really, your credit score is just the numerical grade that's given to you based on what's on your credit report. So when you're working on building your credit score, what you actually really want to be focused on is what is on your credit report, because the things that are on there are determining what grade you're getting for your credit score. And so this often leads to then the next part of the whole credit mess, which is understanding how your credit score is calculated. Because in addition to having that numerical grade just assigned to you, there is a calculation that goes into that. And that again is also based on what is on your credit report. So just kind of a few basics that you definitely want to be familiar with in the credit card world. And this is, again, something that I see a lot. People will come and say, I checked my score on Credit Karma. It says it's this, but when I went to go get this loan, they're saying it's this. The reason for that is because there are two different scoring models. One is the FICO scoring model, and then one is the Vantage. And the FICO scoring model is the one that lenders are going to use when they're determining whether or not they are going to give you money to borrow. So Credit Karma is using a Vantage scoring model. And while they're similar, Credit Karma should be used more like a summary of what you should expect to see on your credit report and what you can expect your credit score to be, whereas the FICO score is what your actual score is being calculated and shown to lenders as. But the other kind of complication that you're going to see here is that there's over 1,000 different scoring models. So when people come to me and say, I'm seeing different scores in different sites, that unfortunately is totally normal. You're never going to see the same score on the same site because there's so many different places use different models. Mortgage lenders might be using a FICO 2. Your auto lender might be using a FICO 8. They just came out with 3 brand new models. So it's really going to be dependent on, again, what is on your report rather than the scoring model, because that is going to change no matter where you go. And then the other thing you want to be familiar with are hard versus soft inquiries. So inquiries are when you are actually, pulling your credit report and looking at it, but there's 2 different versions of this. If you pull your credit report through annualcreditreport.com, you're performing what's called a soft inquiry. That is not going to hurt your credit, and that's not going to impact your score. A hard inquiry is if you apply for a credit card through like Kohl's or TJ Maxx, or if you open an auto loan, or if you apply for a mortgage. That hard inquiry is what you're going to see in your inquiries list. It's going to be the thing that impacts your score if you see that drop. And it's also going to impact your score for up to 12 months, but it'll stay on your credit report for up to 2 years. And so those are just some basics that, just clarifying right off the bat, these are things that come up the most often. But as far as your actual calculation, your credit score is made up of generally 5 factors. And the biggest factor in your credit score is whether you pay on time. So on-time payments make up 35%. And again, this is based off of your FICO score. So if you want to know how your FICO score is calculated, these are the 5 factors that are typically included. But even getting into some of, again, those scoring models, there are some models that actually calculate how late you were. So were you only a couple days late, or were you 30 days late? And typically, if you're getting into like the 30 days late, 60 days late, that's where you're going to see those bigger point drops. The other biggest factor in your credit score is the amount that you owe. And this is where your utilization rate comes in. So if you're looking at your credit card statement and your credit line is $300 and you have used almost $300 of that, that doesn't look great to lenders because you're using all of your available credit. So typically, if you're keeping your balances low or you're paying your balances off each month, that's where you're going to see a little bit more movement in your credit score. So if you do pay things on time and your score isn't moving, maybe look at your actual utilization rate. Are you using all of that available limit? If so, pay that down, and that should help to give you some of those bigger increases. The other things that count in your score but don't factor in quite as much are things like your credit history. So I didn't get my first credit card until I was 26. Because of that, I haven't been able to break into some of the higher 700, 800 credit score ranges because my history just isn't long enough. And then in addition to that, they also look at the types of credit. Do you only have one credit card or do you have 10? Do you have a mortgage? Are you paying on student loans? So they like to see a mix. And they also like to know how often you're applying for credit. Are you getting new store cards like every single month? If so, that doesn't look great. So all of these different factors are weighed differently depending on the scoring model and also differ depending on the lender. So again, every time you look at your score, it's going to look a little bit differently, but these generally are the factors that you want to pay attention to. All right, because I was a financial literacy teacher, I work very well with visuals, color coding, and the way that I like to think of your credit score is like a grade. So again, the different ranges that you're gonna see are gonna vary, but typically anything that is in the mid to lower 500s or less is gonna be considered a poor credit score. And then typically the good to fair range is anywhere from those like mid to higher 500s all the way up to like the mid higher 700s. And again, that range can vary, but typically you want to aim for, you know, a 640 or higher if you're going to start to get into looking for mortgages or other loans. Obviously, the higher your score, the better interest rate that you'll get on that loan, which means that you're not going to pay more interest than you are for the actual thing that you're getting. At least that's the hope. Okay, so that's just kind of an overview on the credit score part. Now we want to talk about your credit reports, because if you're working on your credit score, you're going to want to be familiar with what's on your credit report. The credit report is like a report card that you get that tells you this is why you got this grade. So it's going to include previous addresses, your birthday, and you do want to check your birthday because I've actually had clients not be able to pull their credit report, and it turned out it was because the wrong birthday was on there. They're going to include all of the loans that you've got and credit cards in your names, but they're also going to include any public records. So if you have any bankruptcies, foreclosures, tax liens, all of that is going to show up on there. So this is the main site that you're going to want to go to if you're pulling your credit report, annualcreditreport.com. I have seen the other variations of this site, but this one is the one that is authorized by federal law. And this is the one that is designed for people to use originally once a year. But now they're, because of COVID, doing free weekly pulls. But at least once a year, they allow people to log in, pull their credit reports for free, make sure everything looks good. And I should say once a year, and that it's every 12 months. So you could technically pull one every 3 months if you wanted to not pull them all at the same time once a year. But like I said, right now they're doing free weekly pulls. So you'll come to this site. This is what it looks like. It's not super fancy. And you're going to request your free credit reports. I do want to draw everyone's attention to this little part right here. This site is not going to include your credit scores. This is only for pulling your credit reports. So if you are looking for your actual credit score, you're going to have to use a different method or you're going to have to pay for it. So I just like to make sure that people see that little box because that is something that's important. So the first thing you're going to have to do is verify your information. It's going to ask you for your legal name, your social security number, your birthday, and your address. And you want to use an address that's either on your driver's license or that you have lived at for the past 2 years. You're also going to need to confirm your identity through a series of security questions. This particular box right here to the right that says confirm your identity and has that little authentication part with 4 minutes and 51 seconds, that is only for the Experian credit report pool. So each one has a different like confirm your identity part. This one is the only one that's timed, at least that I have seen so far. So you'll answer these questions. It's perfectly normal if none of the above or do not apply is something that you pick for most of them, because they typically will put things on there that I've never heard of. So don't think they're trying to trick you. If it doesn't apply to you, pick that it doesn't apply. If you get stuck on this part, there's a few things that you can try. The first thing that you're going to want to make sure that you've done is put the right social security number and verified it. A lot of people, for obviously understandable reasons, try to skip this part. It is starred and it will not let you move on, but sometimes that can be a reason if it's entered incorrectly. Addresses, just make sure that the address that you put in is something where maybe if you just moved recently or the address was never updated from a previous address, try a different one. And then the last thing I've actually seen quite recently is if there are multiple people in your family with the same name, put your middle initial or double check that the spelling is right. There's all kinds of little things that it could be, but these are typically the areas where I have people troubleshoot first. Okay, so this is the Experian page that it brings you to. Like I said, there will be a button that will ask you if you want to get your scores, but just be prepared to pay for that if that's something that you do want to do. The first thing that I always recommend that people do right off the bat is print or save your credit report, because again, you're able to pull this, usually every 12 months. You just want to make sure that you get your copy saved. So you'll save that, you'll review it, make sure everything looks good, and then you're going to click get your next report or finish. And then it's going to bring up this screen. Are you sure you want to go back to annualcreditreport.com? And you're going to say yes. So now it brings you back to this screen. Because of this current session that we're in, it will select with a blue check mark anything that you've already pulled. So the next one we're going to go through is TransUnion. This is TransUnion's confirm identity screen. So for theirs, I believe they have this passcode that you complete, and then there is another part with security questions, or like a place where you enter I think it's your email and your phone number. But one thing that TransUnion also does is this. They bring up this screen where they talk again about getting your credit score. This is purely marketing. So you don't need to do this or click anywhere on this thing in order to move on. Just click anywhere on the screen to avoid this marketing tactic. And then it'll bring up your TransUnion report. You'll want to save it. And then it will ask you if you're sure you want to go back. And you say yes again. And so then this just happened the other day and it was perfect because I was screenshotting for this presentation. If this happens, totally fine. All you're going to do is select request your free credit reports. So then you're going to go back to the same main screen. You're going to fill out the personal information again. It's going to bring up this box asking which ones you want to select. Because it's not the previous session, it's not going to tell you which ones you've already selected. So you're just going to have to remember the one that you didn't pull yet. In this case, it was Equifax. And then Equifax will bring up how I go through to get my report. And so again, it's going to ask me to verify some sort of identity piece of information, or this one, again, they'll have security questions where they'll ask you different things. And again, theirs will say, please make sure that you print. So make sure that you do that. Again, just reiterating that these copies are going to be really important for you to make sure that you review and save. All right, and then this screen comes up at the very end. And the reason I bring this up is because people always ask me about whether or not they've been charged for something. This is purely just for you to know that you've gone through, you've requested all your credit reports, and that they are thankful for you checking, and that's all. So you haven't bought anything, you just checked your credit reports. Now, on the actual credit report, annualcreditreport.com website, they have a really, really great resources section. So if you pull all your credit reports, you have them saved, but then you look at them and you have no idea what you're looking at. Each bureau has a guide on their website that tells you what all the codes are, but the credit report itself does too. So when you actually pull up that really long page document that has all of the pages of your credit report, typically somewhere in there at the very beginning or at the very end, they will include a little code that tells you what all the symbols mean and what the different codes mean. And then if that is not included or you're still confused, the website itself will tell you this is what to look for in your credit report. The other really cool feature that they have revolves around identity theft and credit freezes, all of which, again, you can do through the bureaus for free for yourself. But they have a little section on there and just some identity theft basics, and then how to put a credit freeze on your report or on your, on your report and your score. And then the next thing that it will talk about is filing dispute. Though I will tell you, all of the credit bureaus now on their actual websites have an online dispute process. So you can look over this if you want an idea of what all you'll need for the dispute or the language that you'll want to use. But all of the bureaus now have a button that you can just click to start that process online. And then the other really cool feature that they have on their website is this frequently asked questions. And they have links here to the Consumer Financial Protection Bureau, who has excellent resources. Lots of training guides, lots of different things you can use if you're, trying to kind of do things on your own or just want to take that step of empowerment yourself. Their guides are really, really, really helpful. So all of that is just directly on the website, free for you to use. But one thing that I just noticed as, someone who has come from a family of getting out of credit card debt and now working with people is that it can be really overwhelming to look at all of this and then, kind of feel like you're in a place to move forward and tackle it. So the next part is just about making a plan, and whether you want to do that alone or with the help of the FEC is totally up to you. But here are some next steps that you can take if you want to start working on your credit. The first thing is just knowing what's on there. Really being familiar with what is on your credit report and knowing if the things that are being listed in your name are true or not. When I was teaching financial literacy, I had students that would come in all the time with accounts that family members had opened in their names. They had never had a card before. So it's always just really important to be able, to have that skill set of pulling your credit, being familiar with it, and being empowered to talk about it. You want to write down all of your balances, all of your minimum payments, your interest rates, your due dates. That way, you know exactly what's coming out and when, who you owe, how much you owe. And then you can really make a plan for if you want to tackle it based on balance or if you want to tackle it based on interest rate, but really familiarizing yourself with what it is that you owe. And then organize it. So credit card debt or just debt in general comes in two types, secured and unsecured. Secured debt means that there's collateral attached to that. So a car, they can take that car if you don't pay on it. A house, they can take the house if you don't pay on it. Whereas unsecured debt are things like credit cards, student loans, medical debt. Nothing that they can really come after you for, except they can ruin your credit and cause some legal issues for you. So boosting your credit. And these, again, are just a few starting points. The biggest thing, again, I'm just going to keep saying it, is paying the accounts on time. Making on-time payments is really the biggest factor. The other thing, though, is when my mother was getting us out of credit card debt, just to avoid the temptation of having the credit card, she would close those accounts out. You will see that if you do close out any accounts, that's going to drop your score because it's taking away that line of credit and it's taking away that credit history. But I always tell people you can rebuild your score in other ways. So if you're worried about actually getting into the debt itself by having those open, then do what you need to do. But if you can keep them open and maybe just use them once every couple months and maybe just put something small on there and pay it off, that is going to help overall to your credit history. Diversifying your credit accounts, you want to be careful with this one because what it's essentially asking you to do is to open up more accounts and take on more debt. But you don't want to do that just to build your credit score. So if you are in the market for buying a car, great. If you are in the market for buying a house, great. If you need to build your credit though, then you can get a secured credit card through a bank or a credit union. Sometimes they do credit builder loans. A lot of them will require some sort of security deposit, though there are some secured cards now that don't. But the idea is that you're only taking on a small amount that you're showing I can, use and pay this off. And that's going to look a lot better than opening up a bunch of store cards in order to try to diversify your debt. So then again, paying your bills on time, the biggest factor there. And if you are paying your bills on time, Experian Boost is an option now. I think Hulu might have started working with them, maybe Netflix. But essentially what they do is they're offering a way for consumers who pay these types of bills on time to get credit on their credit report. So when you sign up, you're going to have to link your bank account, because what they're going to look for is at least 3 months of on-time payments. And that's for utility accounts and then some of these like streaming services. But again, in order to actually have it boost your credit score, you need to be paying on time. Otherwise, it gives you nothing. So reducing your debt balances, this was that utilization rate I was talking about. The general rule of thumb is that 30% or less is what you want to aim for. So if your credit card limit is $300, you only want to be using $90 of that at any given time in the month, and then paying it off in full if you can. And really, when you're building your credit, the main thing to remember is don't put more on your credit card than you can reasonably pay off that month. Because the goal is not to show that you're using the card. The goal is to show that you can borrow money and pay it back responsibly. And then again, this goes hand in hand with just pulling your credit reports, is getting rid of negative information that's on there. If there's something on there that's incorrect, going through the process of disputing it and providing the proof to get it off of there. And then just in general, kind of overall financial habits when it comes to credit cards that I see often with clients is, credit cards they're an industry designed to give us instant gratification. Instead of saving up and buying things, we can get things now. And with some of those bigger ticket items like that, that's a really great option. But the idea behind credit is essentially that you are borrowing that money. And so if you find that you're putting bills on credit cards, then it might be time to look at your expenses and see, can you minimize anything? Because the short-term sacrifice that you're giving up is going to mean that you have that financial freedom, less stress. You're not, worried about paying things off, because you want to try to avoid paying off debt with more debt. And that really comes down to being honest with yourself about wants and needs. If it comes down to prioritizing, you want to prioritize those things like the car and the house, things that they can take from you, or like with the card, does that provide you a way to get to work? So just thinking through those priorities, thinking through your wants and needs, and being honest with yourself. And if you don't have the ability to do that, or if you need help or support with that, come to the FEC. Because ultimately it's going to be better for you to reach out to creditors, whether that's on your own or with us, and try to get help set up on payment plans, or just let them know that you'll be struggling for a little bit rather than wait until it gets really bad. So always try to reach out in advance if you know you're going to be behind. But even if you do get behind, reaching out and asking about options can be a way that you can manage that debt a little bit more effectively. So like I said, negotiate directly with your creditors. Most creditors offer some sort of payment plan. You can also have the option of settling your debt, which that used to be on your credit report. It would show up as settled for less than the balance and sometimes hurt people's credit. But what I have found is that if they're settling the debt because they don't have the money to pay it all off and using that money to keep everything else current, that has over time resulted in a better credit score than keeping some of the delinquent debt on there. So if it's just a matter of getting rid of some of those older delinquent accounts and you have the ability to settle them, try that route. There's also formal debt restructuring through nonprofits or consolidation loans through banks or nonprofits. Really what you want to avoid are any type of agencies that are charging you for debt settlement or credit repair, because the long and short of it is there is no magic wand that can magically just restore your credit overnight or in a month. Credit just takes time. These companies are not doing anything for you that you cannot do on your own. So they're essentially charging you for something that you can do and that you could honestly repair your credit a lot faster. It will just take a little bit more legwork. And then there is bankruptcy. This offers a clean slate for people. And this is for, circumstances where you've kind of explored all of your options. We just like to make people know, let people know what this means for their credit, what it means for their credit report. And ultimately, you're going to have to hire an attorney for that, because that is something that ultimately we cannot really help with. But at the FEC, we can provide accountability. We help a lot of people get access to resources, or refer them to those resource guides, or kind of help them understand. I've helped people walk through their credit reports. We do pull credit reports through our program through Experian, and that is no cost to you. It is a soft pull. So really staying on top of your credit, making sure everything looks good there, but providing people more so with the tools that they ultimately can take on and use to empower themselves. Because really, as a society, what it comes down to is that we have to normalize talking about money. We all spend most of our day working for it. We should know what's coming in, what's going out, and we should really feel good about controlling our money. And that really starts with just getting comfortable talking about it. So that is kind of my little overview of credit, and I want to make sure I leave plenty of time for questions. So I will stop there.
That's great, thanks. So as a reminder, anyone is welcome to type a question in the chat, or you're welcome to unmute yourself or come on camera if you want to ask a question. Just remember that we are still recording. If you don't want to appear on camera, just take that into consideration. So as people are thinking of their questions, I will just start with some that were submitted on our registration form. So we got lots of questions about inquiries and disputing things on there. Is there any limit to what a person can dispute on their credit report?
No, there's no limits on disputes, but I will tell you, people who just kind of send in disputes for anything, while you may see your score go up, because what happens is that when you send in a dispute, the credit bureau only has a certain amount of time to investigate that. If they don't have the time to investigate it completely, it comes off of your credit report. So that's what a lot of those debt repair agencies are doing. They're flooding the bureaus with inquiries or disputes and hoping that it just falls off. But what happens is that it's going to come right back. So if you're disputing something, if it legitimately is not yours, you need to have some sort of documentation or proof for that. You can't just submit blind disputes and expect your credit to get cleared up. So if you're disputing something, you want to have, so for instance, somebody's family member opened a credit card in their name, maxed it out, and then didn't pay it. They had to have, according to the credit bureau, a police report of them filed against the family member for stealing their information. They had to have a record of the call they made to their bank saying it wasn't them. They had to have, people who have said that they've paid off bills have had to have like a bank statement showing it, or like some sort of receipt. So if you're disputing something, those are the types of things that you need to have. Letters, bills, receipts, hard documents showing that this is definitely not yours. If it is in fact a family member that has opened something in your name and you're not willing to file a police report, unfortunately, there really aren't any other options than you just paying that debt, is what the answer was that I was told.
Okay.
If that helps.
Hopefully that helps people. And how much time do the agencies have to respond to a dispute or settle it? Is there a time for all of them?
They say 30 days, but I mean, the credit agencies, at least from what I'm gathering, are so far behind just in their regular reporting. It could take longer than that, but typically, like legally, they're supposed to have 30 days to investigate something.
And is there a prescribed set of steps for correcting errors on a report, or is that going to be different based on agencies?
So as I mentioned in the presentation, every place now has an online form that you can complete. I haven't disputed any recently on there. So in the past, there was just a form we filled out where it kind of walked you through different questions you had to answer. And then we provided the documentation that they asked for and mailed everything in. With the online disputes, from what I have walked people through, it's kind of the same thing where you'll answer some questions, you'll have to upload some documentation. But typically the process itself, I think, is pretty similar. It'll just, like if you're doing a written one, each bureau might have a different form, and each of those forms will be on their site, or like I said, through that Consumer Financial Protection Bureau, they have links to everyone.
Another question from our chat. Is there anything you can do about old collections on your that are keeping your score down?
Yeah, so with collections, the options are to set up a payment plan, settle the debt, which means that you're like, if you owe them $1,000, you can come back and say like, I have $300. And then sometimes they'll take that. And the one major thing with credit bureaus is, in the past, if people paid the collection, sometimes the bureau would just remove it once it was paid. Nowadays, because by law, credit bureaus have to report everything, good and bad, not every collection agency is willing to take it off. So I've seen collection accounts where it was either paid in full or settled, or there's a payment plan and it stays on there and they just update the amount or they update the status. I always tell people to ask when they set up the payment plan or settle it, to find out what their procedure is, and ask if it will be deleted, because again, the worst they can say is no. But typically when dealing with collections, there isn't a whole lot unless it's past the 7-year mark. So if the collection account itself is more than 7 years old, then at that point you could dispute it for age. But one thing that I also like to tell people about disputes, and especially that age, the 7 years is not from when it's opened. The 7 years is from the last payment that was made on it. And it's actually 7 years and 180 days. So if you don't pay on something, it's 180 days of you not making that payment. And then that clock starts at 7 years for it to fall off. Because that's another big misconception that I see a lot, is when it's going to fall off. So, if you have the time to wait for something, great. Otherwise, your options are to just figure out some sort of payment plan or settle it.
I had a question I was trying to put in the chat, but I kept hitting the enter button, the wrong button. Anyway, with all the fraud, and we don't know these credit bureaus that are calling us. So most of us, I don't talk with them. So if you do the research and go back to the actual company, would they be willing to accept payments or make a plan with you and bypass these credit bureaus? How does that work?
Most of them say no. I try. I call with people and ask, but most of the original creditors, once they sell it, they're kind of like, it's not my problem anymore. And so they'll just tell you to go back to the collection agency. I will say though, I always tell people, you are not under any obligation to talk to these people, because I also get collection calls all day long, but I don't answer the phone unless they leave me a message. But like, I've had clients who get texts from these people, and there are plenty of scams out there. So yeah. I only ever tell people, if we're contacting collections, it's from contact information that we get directly from the credit report. It's not like just answering any of these calls, because they'll call about random debt. And as you agree to make a payment, it restarts that clock. So the only thing that you would ever need to ask these people when they're calling you is say, I want you to validate the debt. They have 30 days to validate the debt in writing. And if they can't validate it, then it has no business being on your credit report.
Thank you. Because I don't talk with them.
Yeah. Well, and that's the FEC, where like, if you're getting harassed, you can always just say to them, like, I'd be happy to talk to you whenever I can get my credit counselor on the line. And then, like I said, I call collection agencies with people. They don't always, you have to like give permission for me to speak to them, and they don't always answer. Like, I've had people, the collection agencies like hung up on me, but for the most part, really for them, like if they can't provide a paper trail, they can't put the thing on your credit report, and they just rely on people being scared and not doing anything, or just agreeing to their payment terms because they're scared. It's just a culture of fear, and it's really gross.
Yeah, thank you.
Yeah.
As we're talking about debt collectors, if a debt has gone through different debt collectors, does that change the original date when it comes to any of the timing related to your report?
So this one is actually a question that I have for the credit bureaus, and I have not been able to get a straight answer. From what I understand, and just from the few people that I've talked to who've been in the industry for a while, if you're asking each company to validate the debt, and if at any point they can't, then again, you have the case for getting it off there because somewhere along the line, the paper trail was lost. So if the debt has changed hands enough and you're asking whoever's calling you to validate the debt and they can't, then sometimes that can be a little loophole there. But typically, no, like if it changes hands, it doesn't really reset the clock. Unfortunately, the only thing that I have really seen reset the clock in a bad way is when people agree to the payment terms that are set up.
And they record that. They record you saying you agreed to the terms.
So it has to be like you agree to the terms and then you set up, like you give them your account information, you set up the actual payment. If you just say like, yeah, I'll pay you guys when I can, but then don't actually set it up, then no, that doesn't count. But if you agree to it and set up a payment and actually give them any type of payment, then that restarts the clock.
That was a good question.
Yeah.
Another question, different topic. What can you do about student debt that seems impossible to pay off? This is very relevant to the times we live in.
Yeah. It depends on the type of student loan debt. If you have federal student loan debt, I always recommend calling your servicer and trying to get on some sort of income-based plan, because typically for federal loans, that's always an option, unless you have defaulted and you have already used your one rehabilitation, which unfortunately is a reality for one of my clients. And so she is just stuck with the payment, or she can, have her wages garnished, or they can, the federal student loans, like they do have more repayment options, but like the options to come after you legally are also endless. So not paying them is also not an option. With private student loan debt, it's almost kind of the reverse, where like there's not a lot of payment options. I have a client who her payment is $1,300 a month. We've told them that we can't afford it, and their response to us was, you can, not make the payment and talk to our hardship department. And their hardship department was collections. I was like, you can't send people to collections just to get them on a hardship plan. But again, there's like, that's the private loan system. So with them, again, you can call them, you can ask them for repayment plans. Some of them will do them. Sally Mae, my nemesis, will not. So that it really will depend on who your servicer is. I just always recommend calling them and seeing what they can offer. At the end of the day, for the people that have just been stuck with their loan payments, unfortunately, the majority of them have had to get second jobs, other sources of income, cut expenses back. Like I've had a few people who had to get roommates or move back home, like, but this is our student loan system. Thanks. So annoying.
It definitely is.
It's a vicious cycle. I had a question about student loans. Just talking about student loans, and it kind of left my head. Because it is a vicious cycle. But I mean, as far as all the companies that keep calling you, say, well, we can get rid of you qualify for student relief programs and so forth. You don't know who to trust. I mean, who do you go back to see if you even qualify, or is it he doesn't really exist?
Well, yeah. And so I've seen companies that have they've charged people to put them on income-based plans. So the people are paying a fee to these people for an income-based plan that they could get on themselves for free. I've seen people, they have refinanced their federal loans into private loans, which you never want to do. If you have already, it's okay. There are other people out there too, but if you have not and you're considering it, do not. If you have federal loans, keep them federal, never refinance to private, because you'll lose all those protections. But yeah, I mean, like the actual student loan and debt system is an actual crisis, and I'm not really sure what's going to happen with it. Just kind of waiting, I guess.
It sounds like a great opportunity if someone is dealing with some of these issues with their student loan, why they might want to call the FEC to get some very specific one-on-one counseling for the situation that they have, considering how complicated it is.
Well, because it's coming down to just honestly prioritizing, like a lot of what we do is figuring out how we can manage everything, because I always tell people, if you cut everything fun out of your budget, you're not going to do it. And I know that from experience. So you have to be able to find a way to balance your budget so that you're able to enjoy your life, you're able to meet your financial obligations. Unfortunately, our society sold us the line that if we went to college, we were all going to have these great jobs and be able to pay our debt off. And that's just not the reality that we live in. But the lot of us are in that boat. And so at this point, because I'm also experiencing that, I'm just trying to help people normalize talking about it, because the more we talk about it and the more people are outraged by it, I don't know, maybe the more likely it is that we will get somewhere.
It looks like we've got one other question in the chat. What if you don't know that your account has been hacked? And that might mean if your identity had been used for other. When you do finally find out, is that going to be an issue because of the time it took to figure that out?
In some cases, yes. There are laws both with banks and credit cards where if you let a certain amount of time lapse before reporting it, there's not really much chance of you getting your money back unless you can prove, again, through that police report or something that incident has happened. The way to combat that, I log into your bank account every day. Even if it's just to check, just to see that things are good. Because I incorporated that habit, I have caught not just one, but 3 times where people have tried to steal money from my account. So I really do recommend just getting into the habit of logging in every day so you can catch those things immediately, report them immediately. And then for older stuff, you can try the dispute route, or you can try calling them, the institution, and talking with them about it. But most places will have a time frame. I think for most credit cards, I think it might be up to 2 days, but with most banks, it might even be just 24 hours that I had with PNC to report it. So definitely always check, but try to get in the habit of logging in every day. And then also get in the habit of pulling your credit reports. Now you can do it every week, but, in regular times, at least once a year, just getting familiar with what's on there.
If there are other questions, people can still speak up, take yourself off mute, or add them to the chat. We do still have time. As we wait and see if anything final comes in, just a reminder that when we send out the follow-up email, there will be a survey in there. If you answer the survey and provide contact information, you'll be entered to win a $50 Walmart gift card. So that can help your budget along. And we really appreciate any feedback about what went great, what topics you would like to see in the future. And that email will also include a flyer for our next training, which will be taking place in October. And that is going to be a webinar about creating a saving and spending plan. So learning how to track your different sources of income and benefits, how you track your spending so that you can meet whatever money goal you would like to have. And that will be based on some resources from the Consumer Financial Protection Bureau, which Kristen did mention at one point in her webinar, which is a great source of all sorts of information. So those will be coming up. We'd love for you to join us. That training will be a little longer. It will be 90 minutes just because there's a lot to go through, but even if you can't attend the entire time for that, anything you can come will probably help you build that budget plan. All right. I'm not seeing any more questions, but I don't want to just end us early in case anyone has anything else, so we can stick around for a few more minutes. FEC is definitely would love to chat with you about any very specific individual issues you're dealing with, or if you just want help individually helping to create a money management plan, they would love to help you with that. So feel free to contact them.
Yeah, and if anyone has any questions about the, the actual program itself, let me know.
Well, can you tell us a little bit more about the program itself? Like, how do you get involved? I do see the information on the screen. Just call this number, but how does that work? How is it structured?
So when you call, you make an appointment. The first session is 90 minutes. And it is it's a pretty intensive session. So we'll send you an introductory email with your appointment time and your counselor, and then a couple documents, one of which is just like a budget sheet. But a lot of it is really information gathering on our part. So we're going to be asking you about, your income sources, how you're spending your money. We're going to make a budget. And then the idea is that we're meeting on an ongoing basis. So I have some clients that I meet with monthly. I have some that I meet with quarterly. I have some that I haven't seen in almost, I think, since the program started, and just recently have reached out with just random questions or want to do a session here and there. Totally client-based, always free, and really just a way for you to start either, if you're working specifically on budgeting for a while and then you want to work on credit. If you're working on just kind of savings habits, we do all those different areas. And then we also have the ability to pull your credit through Experian. So our credit report, we have a partnership with Experian. We will be able to give you your Experian credit score. It is not charged, like you're not charged for pulling your credit, and it's not an inquiry on your report, it's soft pull. So typically the follow-up sessions are anywhere from 30 minutes to an hour, depending on what we're working on, but it's meant to be an ongoing partnership. A few clients were really focused on, I had a client who had a lot of student loan debt, primarily because her private loans were so big. She was living at home. I worked with her for over a year, and I think it was just this past year, she actually moved out and got her own place, and she's still making her loan payments, but it's getting you to that step where you feel comfortable on your own, and maybe you're checking in with me to do stuff, but ultimately the goal is that you feel good about managing your money. There are a few things that we don't do, though, that I like to specify. We do not do taxes. We make referrals for those, typically to the United Way. We're not attorneys. So, we do help people understand kind of the different types of bankruptcy and what they could expect from that process. But I can't tell somebody whether or not they should file or not, and I can't help them with that process. They would have to file an attorney, or they'd have to find an attorney. And then we are not long-term investment planners. So if you're looking for investment advice or things like that, I mean, I have a personal interest in it and I like to talk to people about it, but I'm not certified to tell somebody long-term how to manage those types of finances. So again, we would help you kind of navigate that. But our focus is really on the personal finance, budgeting, savings, paying down debt and building credit.
I think I dealt with all three.
All right. Yeah. I mean, and again, so you can call the number or you can go through the site. Either way, it's really just dependent on when you want to meet. But like I said, that first session is the longest, and it is, it feels a little invasive, the questions that we're asking, but all of it is to help us get an understanding of where you're at financially so that we can help you get to where you want to go. Because as I said earlier, our society is just so afraid to talk about money. And we were just, told our whole lives, you don't talk about it, you don't talk about it. And then look where we're at. So.
And is this free? Is there?
What'd you say?
Is it free? Is there a cost, a fee?
No cost. Nope. We are a completely free service.
Okie
dokie.
Mm-hmm. Since we have dead air, you can tell. My supervisor wanted me to attend this meeting because I keep telling him I don't make enough money. It's not that I'm really not making it. I don't make enough money.
Yeah. Well, and you know, I have found that is true sometimes, depending on certain cases. Like if people have if they've taken on more than they can, or honestly, I've had a lot of clients lately who we've been tracking their expenses for a couple months now. And I have to have the conversation of, it's your kid. I'm sorry. It's your or like, person that's living with you, you know, like it's very clearly like they're spending on they're essentially supporting two people on one income. But, you know, when you're supporting people that you love, you don't see it that way. So then it's just managing expectations and prioritizing. And can that person pitch in for some things, you know, obviously when they're little, but so it really just, the FEC is helping people, again, normalize talk about money, be familiar with your money. Don't be afraid of it. I for a long time was really afraid to log into my bank account. I didn't want to see what was in there, but I have found that the more that I confront it and the more that I'm just like, okay, I made a mistake, the easier it is that I find to pick myself up and keep going forward. Because one thing that you will find at the FEC is that all of the counselors, while we have gone through very intensive training and are all officially accredited credit counselors, we all struggle with money in our own ways. I am an impulsive and compulsive spender. If you put me in the store, I will find something to buy. So, you know, really figuring out what those triggers are, what your habits are, all of that is really important. And those are all things that we can help you with at the FEC.
We did have one final question in the chat that came. How come car insurance isn't counted as credit?
That's a great question. I don't know. We don't know. It's kind of the same thing with some of the utility companies. You know, like I don't understand why if I'm paying a utility company on a monthly basis, like I don't get credit for this. But it's one of those things where if the upper regulations don't require it, they're probably not going to do it.
Is that an item, do you know, that would count towards the Experian Boost you shared where it tracks some of those regular payments?
If that particular company signed up with Experian Boost, maybe. But the general idea that I get from Experian Boost is that the company has to have a partnership with Experian permitting them to report this information. So like Netflix signed up with them, but if the insurance company isn't partnered with them, most likely no, you will not see it on your credit report.
Okay. It's worth asking.
No, a great question. I feel like if you're paying for something, you know, you should get credit for it, but.
All right, that is just about all the time we have. That email will come out tomorrow. I'll definitely make sure there is this contact information so that if anyone has follow-up questions, feel free to reach out to Kristen or any of the staff at the FEC. Their jobs are to help us, so please make use of the service. And thank you all for attending today. And thank you, Kristen, for sharing everything with us today.
Of course, yeah, I love nerding out about it. So yeah, come talk to us. Thanks, everyone.